So what happens when a Wall Street darling, a real leader in its field, just suddenly hits a brick wall? Well, today we're going to break down the anatomy of an earnings meltdown. It's the story of Lantheus Holdings and the day over $1 billion of its market value, well, it just vanished into thin air.
To really get this story, we have to start at the most dramatic moment. We're talking about the morning of August 6th, 2025. This was the day that for Lantheus, the bottom completely, and I mean completely fell out.
And this was the number that said it all. Just imagine waking up and seeing this. By the end of the trading day, Lantheus Holdings stock had plummeted by nearly 29%. For anyone holding that stock, it was just a brutal, shocking loss. But, that percentage drop, it only tells you part of the story. The really crazy part is the volume. This wasn't some slow drift downwards. This was a stampede for the exits. When a stock trades at 9 times its average volume, that's telling you it was a sudden, violent, widespread panic that just erased over a quarter of the company's value in a few hours. So you have to ask, right? What on earth could trigger a collapse like that? To figure that out, to really understand the panic, we've got to rewind the clock just a few hours earlier to the company's absolutely disastrous second quarter earnings call. All right, so every market panic has a trigger, right? A starting point. For Lantheus, it all kicked off with some really bad numbers that set off every single alarm bell on Wall Street. The earnings release was, wow, just a sea of red. Yeah, the company missed expectations on earnings per share, but the number that truly spooked investors was the total revenue miss. See, that signaled the problem wasn't just about profits, it was about the fundamental health of the entire core business. And if we dig a little deeper, we can see exactly where that revenue miss came from. While their other product, Definity, was actually growing, their blockbuster, their star player, a prostate cancer imaging agent called PYLARIFY, saw its sales fall by over 8%. The company's main profit engine was suddenly in some serious trouble. So it's clear the company's most important product was facing a crisis. And it really all boiled down to 2 immense pressures hitting it at the exact same time, a real perfect storm. Okay, first, we got to understand this term, MUC, which stands for mean unit cost. It's a new government reimbursement model that kicked in during 2025. To put it simply, it totally changed how hospitals got paid, and that made them incredibly sensitive to the price of products, just like PYLARIFY. And that created the perfect storm I was talking about. Just as customers became laser-focused on every single dollar because of this new MUC model, a major competitor jumped into the market with some really aggressive price cuts. All of a sudden, PYLARIFY was caught in a pincer movement. So, faced with all this, Lantheus's CEO explained they had to make a tough call. He said they made a conscious decision to protect their pricing and their profitability, even if it meant walking away from business. They decided it was better to lose some sales than get dragged into a destructive price war. And that decision, that's what led directly to that big revenue miss.
But, with their main profit engine under fire, management wasn't just going to stand there and take it. Nope. They immediately laid out a really clear 2-pronged strategy to fight back and try to regain control of the story.
Their plan boiled down to 2 pretty simple steps. Step 1, fix the immediate problem. That meant reinforcing their core product, PYLARIFY. And step 2, play the long game. They needed to build new pillars of growth so they would never, ever be this dependent on a single product again. Part 1, then, was all about fixing the core. The company revealed they already had a next-generation version of PYLARIFY in development, one that was specifically designed to counter the exact market challenges they were now facing. And this new version is already on the fast track with the FDA, aiming for a potential launch in late 2026. What's the big deal? Well, it promises to be more efficient to produce and, this is the crucial part, it's expected to get a special reimbursement status that would completely level the playing field and basically neutralize that whole MUC problem. Now, let's talk about the second, and frankly much bigger part of their plan. This is a huge, long-term bet on a completely different and potentially massive new market. Alzheimer's diagnostics. To pull this off, Lantheus basically went on a shopping spree. They bought 2 different companies, Evergreen and Life Molecular Imaging, to get new manufacturing muscle and, most importantly, to acquire the key assets they needed to become a major player in diagnosing Alzheimer's disease. And this is why they're doing it. This is the prize they're chasing. Management estimates that the U.S. market for Alzheimer's PET imaging could be worth $2.5 billion by the mid-2030s. When you see a number like that, you understand why they're willing to make such a big bet. So what we have now is a really clear setback, followed by an equally clear comeback plan. But what this creates is a fundamental conflict, a real face-off between management's confident, long-term vision and Wall Street's immediate and very deep skepticism. And this creates a classic standoff. On one side, you've got management putting their money where their mouth is, authorizing a massive $400 million stock buyback to show how confident they are. And on the other side, you've got Wall Street analysts downgrading the stock, telling investors to basically mark time, just wait on the sidelines until the picture gets a whole lot clearer. So in the end, the entire story of Lantheus's future really hinges on this one question. After such a devastating loss of confidence, will investors be willing to buy into a long-term vision for Alzheimer's when the profitable present they thought they knew has become so uncertain? Well, I guess only time will tell.